Welcome to the FinGlimpse podcast, where we analyze the world of business, finance, and the economy. We cover the latest market news, economic trends, and some interesting businesses. As a standard disclaimer, this podcast is for informational purposes only and should not be considered investment advice. Always do your own research. Now, let's get started.
Welcome to the Deep Talk, the place where we sift through stacks of information to bring you the most potent insights. Today, we're tracing the remarkable journey of Genus Power Infrastructures Limited, a company that's, quietly positioned itself right at the epicenter of India's monumental smart grid revolution. You sent us a real treasure trove of sources, including their recent Q4 FY25 earnings call transcript, and also a really rich discussion from the Value Picker Forum, that popular online investment community that spans several years.
Yeah, and our mission today is really to unpack all of this, highlight the crucial data points, connect them to the broader industry trends, and help you understand what's really driving this sector, what Genus Power's role actually is, and what the future might hold. We're looking for those aha moments, basically, turning raw data into clear understanding, giving you that shortcut to being truly well-informed.
So how did Genus Power get to this pivotal point? And what strategic moves are powering their future in India's incredibly dynamic energy landscape? Let's unpack this. Okay, so to really get where Genus Power is headed, let's first look at where they came from. This company, it was incorporated way back in 1992.
Right.
And they began producing tamper-proof meters by, 1996, building a pretty solid foundation in the metering space. Historically, their revenues have mostly come from the domestic market, right?
Precisely.
Right.
And it's essential to grasp their core business focus, smart metering solutions. That's historically been around like 87.5% of their revenue.
Wow, the vast majority then.
Yeah. While they also had an engineering, constructions, and contracts, or ECC vertical, contributing maybe 12.5%, it's clear the strategic emphasis has shifted away from that now. And what's really noteworthy from those value pick discussions is that Genus had already established a pretty significant footprint, holding something like a 27% market share in the overall meter industry,
Right.
and an impressive 70% market share specifically in smart meters, historically speaking.
70%, that's huge. And their scale, you mentioned, over 60 million meters installed to date. That's a massive number. How does that kind of track record translate into their most recent performance?
Well, it's a testament to that history, really. FY25 truly stands out as a landmark year for them. Management themselves called it a period of record-breaking growth, driven by strategic execution strength.
Okay, those claims are definitely backed by the numbers we saw. For Q4 FY25, the quarter ending March 31st, 2025, their standalone revenue hit INR 937 crores.
Yep.
That's an astonishing 123% growth over Q4 FY24. And 55% sequential jump.
And their operational efficiency also surged. EBITDA climbed to INR 208 crores.
Wow.
Yeah, that's a 276% year-on-year increase. And margins expanded significantly to 22.3% profit after tax, more than 4 times higher than Q4 FY24, reached INR 129 crore.
And the full year FY25 paints an equally compelling picture, right? Revenue more than doubled, yeah, to INR 2,442 crores, from about 12,201 crores in FY24. EBITDA was up 247% year-on-year to 470 crores, with margins improving to 19.2% for the full year.
Oh.
And their PAT, profit after tax, grew nearly 4 times, INR 298 crores. It's just a breakout year by any measure.
It really is.
And what's truly insightful here, I think, is how this massive growth trajectory ties into their order book. As of March 31st, 2025, it stood as INR 30,110 crores, net of taxes.
30,000 crores.
Yeah. And this isn't just a big number. It sort of transforms Genus from a project-by-project play to a predictable multi-year growth engine. It offers clear revenue visibility for maybe 8 to 10 years.
Right. That's huge visibility.
Absolutely. And management expects 55% to 60% of this revenue to actually materialize in just the next 3 years. It fundamentally de-risks their business model, in the sector that's traditionally pretty volatile. That's a massive pipeline. And it squarely brings us to the core catalyst driving all this phenomenal growth: India's smart metering revolution. At the heart of it, as you mentioned, is the government's revamped distribution sector scheme, or RDSS.
The RDSS scheme is, it's a colossal game changer. It's got an outlay of over 3 lakh crore rupees over 5 years, from FY22 to FY26, and a substantial chunk of that, Rs 1.5 lakh crore, is specifically earmarked just for smart meters.
Just for smart meters.
Yeah. The main objective: cut down those aggregate technical and commercial losses, the AT&C losses.
Right, the power theft and inefficiencies.
Exactly. Cutting this down to 12–15% by 2024–25 is crucial for the financial health of the distribution companies, the discoms. And the scheme also aims to completely eliminate that gap between the average cost of supply and the average revenue realized, the ACS-AR gap. Basically, make these utilities financially viable.
The ambition is certainly there. I mean, installing 250 million smart meters, that's 25 crore, by March 2025. Though, as the earnings call mentions, the current pace is lagging a bit.
It is lagging slightly, yeah. They mention around 12 crore meters have been awarded and maybe 2 crore actually installed as of that June 2025 call.
Okay.
But despite the lag, the sheer scale is just mind-boggling.
And the funding mechanism seems quite clever.
It's particularly innovative, yeah, designed to overcome those historical payment challenges. The central government gives grants like RS 900, or 15% of the cost per meter, plus incentives for getting it done faster. The rest is financed by the Advanced Metering Infrastructure Service Providers, the AISPs.
Okay, the AISPs.
Right, so this model means states don't have to pay up front. Instead, the utilities pay a rental per meter per month. It shifts the financial burden and the risk, which should really help wider adoption.
It certainly sounds like a win-win on paper. But, with a scheme this ambitious, are there any potential friction points? Or maybe less obvious challenges you foresee in actually implementing RDSS? Perhaps related to state-level bureaucracy or just execution speed?
That's a very fair question. While the intent and the funding model are definitely strong, the sheer scale does present logistical hurdles. You've got state-specific requirements, coordination issues. It's complex.
Sure.
However, the consistent push from the central government, combined with the clear financial benefits for the discoms themselves, it means there's a very strong incentive to overcome these bumps. And smart meters have already proven their value. For instance, in Uttar Pradesh during the lockdown, 95% of smart meter consumers were billed properly. Compared to just 29% for the others with traditional meters.
Wow, that's a stark difference.
It led to a tangible 15–20% average increase in monthly revenue per consumer for the discoms there. So you see, a smart meter isn't just a device. It's basically an economic lifeline for these distribution companies.
Yeah.
I mean, imagine being a discom manager pre-smart meters during lockdown, trying to bill customers when you can't even get readings. This isn't just like an efficiency gain. It's a fundamental business transformation for them.
That's a powerful illustration of the impact, definitely. And we're seeing new tenders now being driven by states like Madhya Pradesh, Tamil Nadu, Haryana, with strong expectations for future activity from West Bengal, Telangana, Kerala, Karnataka too, which leads us nicely to Genus's strategic positioning within this whole burgeoning market.
Right. Genus Power boasts a pretty impressive end-to-end model. They handle basically everything, from in-house manufacturing to the comprehensive software integration, the head-end systems, HES, the meter data management, MDM.
The whole package.
Exactly. And they were early movers. They highlighted their significant investments in capacity and tech well before this current boom really took off.
And they've adopted a truly flexible approach, which I think is probably key here. Genus acts both as a direct supplier of meters to other AMI ISPs and also takes on projects directly as a system integrator under that DBFOT model, design, build, finance, operate, transfer.
That's right, DBFOT.
That versatility must give them a pretty significant competitive advantage, I'd imagine.
It absolutely does. Their competitive edge, as they often emphasize, stems from substantial R&D. They have around 300 engineers working on this stuff, and deep vertical integration. This lets them offer customization for varied customer needs in different geographies.
Which is crucial in India.
It's critical in a diverse country like India, yeah. They even claim to be the only company providing end-to-end solutions, positioning themselves ahead of competitors like, say, Schneider. And they correctly stress that for smart meters, quality is paramount. These things need to run 247 without failing.
Right.
A cheap meter that breaks down, that ends up being far more costly in the long run.
Okay, now here's where it gets really interesting for us, because this feels like a genuine pivot point for Genus, the GIC platform. Genus Power and GemView Investment, that's an affiliate of GIC, the Singaporean Sovereign Wealth Fund, they've formed this strategic platform specifically to undertake these AMISP concessions.
Exactly. This partnership is structured with GIC holding a 74% stake and Genus holding the remaining 26%. It comes with an initial pipeline with a capital outlay of around USD $2 billion.
$2 billion?
Yeah. But the crucial part, the real game changer, is that Genus is the exclusive supplier to this platform
Exclusive
for smart meters and all the associated services.
The impact on Genus must be just monumental, right?
Yeah.
I mean, for a company that, as we discussed, has historically grappled with payment delays from state electricity boards, what does this partnership with a sovereign wealth fund truly unlock for them, beyond just securing capital?
Oh, it's transformative. This strategic move is expected to sharpen their focus, significantly improve their capital allocation, and ultimately unlock substantial value for shareholders.
Right.
But you hit on the key point. It dramatically reduces Genus's direct exposure to that historical working capital stress.
Right.
So instead of waiting potentially months for payments from various state electricity boards, they'll now be dealing primarily with the GIC platform, expecting payment within a much tighter time frame, like 30 to 50 days from the JV.
Okay.
That's a profound improvement for their balance sheet health and their operational cash flow.
So with this GIC platform now in place and their existing capabilities, how is Genus actually scaling up operations? And what's their financial outlook for the coming year, FY26?
Well, their installations are already ramping up significantly. Genus installed about 1.5 million meters just in Q4 FY25 alone.
1.5 million in one quarter.
Yeah, and for the current fiscal year, FY26, they're targeting a huge ramp up to 7 to 8 million meter installations.
Wow. And their manufacturing capacity clearly supports this ambition, right? It's currently at 15 million meters annually.
15 million, yeah. That's up from 10 million in FY24, thanks to recent CapEx. And management noted this can be easily enhanced further, maybe to 16 or even 20 million within just 3 to 6 months if needed.
Okay.
They also clarified their CapEx isn't purely for boosting output numbers, but also heavily focused on automation and software development.
Right, that speaks to the end-to-end strategy again.
Exactly. Looking ahead for FY26, management sounds pretty confident. They're guiding for a top line of INR 4,000 crores.
4,000 cores, that's almost 60% growth year on year.
Almost 60% growth, yeah. With EBITDA margins guided at around 18%.
Okay, 18%. That's a bit lower than the Q4 margin of 22.3%.
It is. While Q4 was impressive at 22.3%, they're giving what they call a conservative 18% guidance for the full year. They're emphasizing sustainability and certainty, which frankly, is probably a sensible approach given potential market volatility and the ramp-up scale.
That brings us to what has historically been a major pain point for companies in this whole sector, working capital and debt management. In the past, Genus faced really high receivable days, sometimes around 6 months, maybe 200 days.
That's right.
Due to dealing directly with state utilities.
Yeah.
And their working capital saw what they called temporary elongation during the recent ramp-up.
That's a critical point, absolutely. However, management now foresees a gradual normalization, they say, over the coming quarters. This is expected partly as more projects move into stable operational phases, but most importantly because of the transformative impact of that GIC platform we just discussed.
Right, the faster payments.
Exactly. They anticipate debtors' days improving by maybe 20 to 30 days gradually, quarter on quarter. That would be significant.
Definitely.
In terms of debt, their net debt to equity is currently between 1.5 and 0.6. Pretty manageable. And the company states it will surely not go more than 1.1, indicating a prudent approach to leverage.
Okay.
So while debt might increase in absolute terms to fund all this growth, it won't balloon at the same rate as their surging revenue.
Okay, and beyond electricity, it seems Genus is also smartly looking at diversification. They've been working on gas meters for 2 to 3 years now. Pilot projects ongoing.
That's right. Management projects, this could become a pretty significant industry itself, maybe RS 6,500, 7,000 crore, with a domestic market potential of around 4.2 to 5 crore gas meters by 2029.
Wow.
They anticipate a meaningful revenue contribution for Genus from gas meters in the next, say, 2 to 3 years.
And water meters, too.
Also, pilot projects underway for water meters, yeah. Shows a broader vision for utility metering overall. And on the export front, Genus has been focusing internationally for 4 or 5 years now, seeing new inquiries coming in. They anticipate significant results starting next financial year, FY26 and beyond, targeting what they call strategically important markets. That includes both transitioning economies moving from conventional to smart meters, and also mature markets that need replacements, for their phase 2 or phase 3 smart meters. It's a smart long-term play looking beyond just the initial Indian rollout.
Now, every company, especially one operating at this scale in such a dynamic environment, inevitably faces some concerns and risks. One notable event mentioned in the sources was a search by the Directorate of Enforcement, the ED, back in December 2024.
Yes, that was mentioned. Management states that the situation remains status quo. They say no further communication has been received from the department or the courts, and they've also emphasized that it has not affected anything on the company's working, which, seems to be reflected in their strong Q4 results that came after that event.
Okay, so while management states it's status quo and hasn't impacted operations,
Yeah.
how should a discerning listener maybe weigh the potential long-term implications
Mm-hmm.
or, reputational risks of such an event, even if no charges are ultimately brought?
That's a very fair point for any investor or anyone watching the company to consider. While the company's operational performance appears, unaffected to date, it's always prudent to keep such events in perspective. Public perception, even without formal charges, can sometimes linger. That's true.
Mm.
However, I'd say the market's reaction so far, alongside the continued strong financial performance and that major GIC partnership, it suggests a degree of confidence has been maintained, at least for now.
Okay. And there have also been some historical perceptions around corporate governance, right? Particularly regarding related party transactions and pledged shares, as flagged in that Value Pick Forum discussion.
Indeed, the Value Picker Forum did note previous concerns, particularly about related party transactions. However, it's important to note that the strategic investment business demerger into Genus Power Infra Limited, which was sanctioned by the NCLT, the court, that was specifically intended to enhance focus and capital allocation. It seems designed to directly address these types of concerns by separating the core business more cleanly.
Right, creating more transparency, perhaps.
Exactly. And regarding pledged shares, where some older sources mention figures like up to 66% for promoters, management clarifies this is largely a commitment to the GIC platform, basically to maintain a certain minimum shareholding level as part of that deal.
Okay. Not a typical loan pledge.
They claim hardly any shares that has been pledged by Genus in the traditional sense, like against a loan. For an investor, obviously, understanding the exact mechanics of this commitment versus a traditional pledge and any ongoing reporting requirements would be key for full transparency.
Makes sense. What about execution challenges? Especially given the historical context you mentioned of fixed-price contracts.
Yeah, historically, those fixed-price contracts, combined with raw material price volatility, especially for semiconductors, did squeeze margins sometimes. However, management now states that semiconductor supply for FY23 was secured well in advance. And importantly, they say they now have mechanisms in place to pass on raw material price impacts in current contracts.
Okay, that's a crucial change.
It is. They also note, realistically, that project execution can still be affected by external factors, weather, elections, festivals, which can make smooth quarter-on-quarter comparisons a bit challenging sometimes. It's not always going to be a perfect linear progression on the ground.
And payment delays from utilities, which has been, a perennial issue in this power sector for so many companies.
Right. Well, they acknowledge that initial hiccups can still occur with some utilities, but overall, they say payments are generally as per the expected timeline. And the key reason for that is because the RDSS is a central government scheme with pretty diligent reviews and oversight.
The central backing helps.
That central government oversight and the funding mechanism provide a much more robust payment assurance than utilities might have had on their own in the past.
Okay. Lastly, competition. This is obviously a massive opportunity, so new players must be looking at it, or existing ones stepping up. How does Genus stack up?
Competition certainly exists, yeah. From both strong domestic players like L&T, ITI, Secure Meters, HPL, and also global players like Schneider Electric operating in India. Interestingly, though, the sources mentioned past attempts by Chinese companies to enter this market, but apparently their tenders have often been canceled due to quality or supply issues.
Okay.
And also, crucially, new requirements for over 50% Indian value addition in these projects.
The Make in India aspect.
Exactly. That effectively levels the playing field somewhat for established domestic players like Genus who have local manufacturing and R&D. It's also worth noting those recent keyboard appointments they made. Mr. Subhash Chandra Garg, a former Power Ministry IAS officer, presumably for government liaison, and Dr. Keith Mario Torpy, who was formerly with Landis plus Jur, a big global metering player, likely for global technical expertise.
Right.
These additions seem strategically aimed at strengthening both their government relations and their technical capabilities, signaling a pretty clear intent to dominate this space.
What's really fascinating here, I think, is how Genus Power, a company with literally decades in the metering business, seems to be leveraging all that deep expertise to navigate this truly massive smart metering opportunity in India. From their really impressive FY25 financials to that very strategic partnership with GIC. They're clearly building a formidable and perhaps, as you said, significantly de-risked position in the market.
Absolutely. And if we connect this to the bigger picture, the shift to smart meters, it's not just about fancy technology, right? It's fundamental. It's about improving the financial health of these power distribution companies, the discoms, and ultimately ensuring better energy security for the entire nation. Which raises, I think, an important question looking forward. In a world that's increasingly reliant on precise energy management, how will companies like Genus Power continue to innovate and adapt beyond just this initial massive rollout phase? Will their end-to-end capabilities, for example, allow them to capture recurring revenue streams, maybe from data analytics or grid optimization services that build on top of the meter infrastructure, especially as the sheer scale of India's growing energy needs continues to push the boundaries of what's even possible for smart grid solutions?
That's definitely something to chew on as India continues its really vital journey toward a smarter, more efficient energy future. Thank you for joining us on this deep dive.
That's all for this episode of the FinGlimpse podcast. If you found our discussion insightful, please consider subscribing and leaving a review. We'd love to hear your thoughts and suggestions for future topics. Until next time, stay informed and make smart decisions. Goodbye.